technical analysis with the Gravestone Doji candlestick pattern that combines the bearish element of a long upper wick from the bearish shooting star pattern with the indecisive or neutral sentiment of a doji candle that can influence the transition to more flatter or range-bound movement rather than an immediate and sharp reversal back down. This chart demonstrates the behavior quite well, because overall price does drop, and even though there are some quick short-term bearish accelerations, in the broader context the drop isn't exceedingly large and it's mostly gradual, while taking place within a fairly well-defined range. That also has brief periods where price remains relatively flat and unchanged. Since price keeps returning back to the upper boundary defined by the price range of the Dragonfly Doji, a more substantial downtrend becomes less likely, especially now that price has advanced and maintained a presence over the mid-30s. Later, the shallow downtrend lines from the Gravestone Doji's range help define a wide lower boundary for a later continuation. Just like with the bearish shooting star, candles with Gravestone Doji characteristics gain additional bearish context if they appear within an established uptrend and have price quickly close under their low, rather than rocket past their high, which is more confusing here because the Gravestone Doji has a slightly longer lower wick than normal, making it closer to a regular balanced doji. Also, it didn't form above the candle before it, so it leans more towards indecisive rather than fully bearish sentiment. And since the last two candles have been red to confirm a newly formed bearish harami pattern, a bullish continuation seems less likely even after the large green candle with exceedingly high volume closed price to a new high. So it's important to see how the Gravestone Doji forms, and pay attention to minor characteristics like its longer lower wick than normal, along with its placement in the broader context in relation to the candles before and after it. It's quite fitting the candle pattern after it was a bearish harami, since that also has combined bearish and neutral to indecisive sentiment. The next chart demonstrates a candle somewhere in between a Gravestone Doji and a normal bearish shooting star candle in terms of its relatively small real body, reversing price after a minor bullish retracement halted the larger downtrend. Then price returns on an incline back to the Dragonfly Doji's range, where the short-term resistance around 62 is soon surpassed. And in the broader context, that triggers the completion of a double bottom reversal that can also be well defined by the Fibonacci retracement levels of a larger and smaller retracement. If we go back to the high of this candle, defining a major downswing point at 61.82, the Dragonfly Doji / bearish shooting star candle gains extra validity by also running through a recent gap fill range. The range around 61.82 then becomes a key short-term support as price quickly rebounds and continues higher. With this next example, here is a downtrend with some familiar bullish reversal candles that have varying degrees of influence in slowing down the long-term drop. Then a Gravestone Doji appears, but this is outside the usual context where it forms in front of an established uptrend. Also, the next candle closes below its low, but that's a bull hammer. So this Gravestone Doji is better described as the price action of something closer to an inverted hammer candle, because the longer upper wick in this kind of context is showing bullish sentiment and intent to push price back up. So even without the bull hammer following it, it would be a strong bullish signal for price to consecutively close above this Dragonfly Doji's high. The relatively aligned closing prices of the bull hammer and the Dragonfly Doji can be used to reference this new level of support. To better define this range as a lower boundary price is currently falling into, it's a good bullish sign to see lower wicks form close to or on this area, around 39.25, and we can even use the low of the bull hammer to extend the range even more for more comprehensive coverage down to 37.78. which becomes useful as price drops back into this region with increased bearish volatility. While this range can be influential, its levels can still be breached during periods of highly sustained selling volume.